Hey traders, this is Christian from Tribeca Trade Group with your end of day recap for the first day of February. And a lot to go over. Again, a lot of movers going on in the market, a ton of names reporting earnings after the close. We'll take a look at a couple of those names. But I was making a little bit of a joke earlier saying I don't know who decided to put all these names that are reporting within a 2 day span. I don't remember a quarter like this before where we've seen just about every large name that you can think of reporting in within 2 days. It used to be Microsoft and Google were one day, Amazon was another day. Apple was a little bit further, and then Facebook, a day or two after that, or vice versa. Now you have them all stacked up in 1 to 2 days, and even Visa and Mastercard reporting the same exact day too. I don't remember that ever happening before. So I think that makes it just relative to what we saw in the market today, a lot of back and forth, a lot of choppiness, maybe a little bit angst in the marketplace with Amazon as much as it is up from last quarter, up about 50% from the last time it reported earnings. Amazon really started to sell off at the end of the day a bit, with I think a little bit of nervous hands in the last hour of the day. Plus, we had some big moves in other areas besides equities, besides U.S. equities, I should say. You see the DAX this morning, which I still do not really have a reason for, but the DAX was down at one point, down 1.5%. And very quickly and moving fast. So it was the biggest down day that we've seen in the DAX. I actually went through. I think it was back here was the last time that we saw the DAX move that much percentage-wise. So it broke the 100-day moving average. I mean, these moving averages are very tight. So I would almost say watch the 200-day moving average and see what happens there. Again, I didn't see anything majorly that happened other than they had a little bit of economics, but that came out at 3 o'clock in the morning. So I don't know what caused that. If you kind of roll over to where this is what caused pre-market the S&P to really take a dive lower, was that move in the DAX, and it really didn't spill over to any other markets internationally, any of the other European markets. I mean, a couple of them were weak, but certainly not as bad as the DAX. Finished down 1.4%. You can see right in the middle of the screen. The CAC was down 0.5%. Euro stocks, which do have German stocks in there, are down almost 1%. But even like the FTSE, the Italian market was even up. Usually when there's volatility in Europe, Spain and Italy get it first. So really weird to see this take place in the DAX. And you have to keep it. We'll keep an eye on it tomorrow morning and see how it responds to that type of move. So that's what happened there. That was the beginning of the day, and we managed to get a nice bounce off of that. At one point, I think we were up about 30, 40 basis points, and then we gave it all back. So if you're using the value areas that we use in the trading room, some really good indications here. There was a little bit of a pause for a while before we got into value, but we just didn't have the momentum to break further here. And then in the Nasdaq, that was really where we saw, I would say, some of those weaker hands play out in the marketplace. That finished down only down 40 basis points, so kind of just weird. Again, very herky-jerky movement here. I mean, we broke through the value area, we hit the top of value, and broke through. And you see Nasdaq actually Nasdaq futures are rallying a bit. We'll look at a couple of these charts. Amazon, really a nice level to watch in Amazon was on the 1 hour bar, which I will bring up, but you could see Thinkorswim is a little bit slow right now. You could see that Amazon is basically on the highs of the day. Where did we find support? Well, if we switch over to the hourly bar, you will see I mean, look at that level of support using the 1 hour value area. So that was tagged perfectly at 1387. This is why we use the value areas. They provide really exceptional support and resistance levels. So if you're day trading or even swing trading a little bit, You know where there's support right around. And again, the value areas are based on this is last week's this week's value area is based on last week's price action. So and a one standard deviation around there. But again, this indicator is drawn. The lines are drawn automatically for you, and it does just a really great job of giving you some guidance where there might be some buyers and sellers defending a particular level. All right, so that's just one of the names that reported after the close, and a little bit about today's price action. Also bonds, the big story, and then I'll get into today's option activity. But bonds continuing to break down. So if you look at the long bond, or if you look at TLT. TLT was down 1.7% today. I'm on the hourly bar again. Look at the resistance here. Try to get into the value area and failed, and then deteriorated. But a pretty big day. If you're looking for a similar red candle, I would say maybe back here in TLT. Other than that, we really haven't seen it. So things are really breaking down pretty decently in bonds, and that also creates a little bit of volatility in equities. Anything, whether it's currencies, rates, when they start moving quickly, really it creates a little bit of animosity amongst holders of equities to see something like this move. Remember when the dollar was really strong, or weak for that matter, it kind of spills over to the equity market too. So I think right now bonds are a must watch. I would think that this will be good for financials. I think the financials did okay today. So if you look at the XLF ETF or the KRE, one of the best, being that all equity, most sectors and the overall market has dipped a little bit. Look at the financials, up 1% today, and pretty strong, retaking the 5-period exponential moving average. We did see some call buying in this group today. We see a lot of BAC call buying, but look at the move in BAC today, up 1.6% today. Earlier in the week, we saw some calls go up in Zions Bancorp. That name looks pretty strong. We saw a little bit of Citigroup calls as well today. So, if you don't want to pick an individual name in this group, you could always just buy the XLF or buy the KRE. I think that's an excellent looking candle there for Citigroup, taking out, and finding that support both on the 20-day moving average as well as the new value area. So it's above value. So I like a long in Citi, I like a long in XLF, and I like a long in Zions. All right, so that's all a little bit of activity today. But really, I would say on the option side, what was most interesting is at the energy call buying. There was about 5 or 6 different energy names, which have been pretty quiet lately. But it's nice to see them come back in on a dip. There were some weekly XOP calls. Taking a look at the XOP chart, look at where it's fallen down to. So would you rather buy XOP up here, or would you rather buy it into 50-day moving average support and the top of the January value area? Notice it is below value for the month, but maybe you could get a move back at least into this 38.88 level. In the oil services is where we saw a lot of the call buying. So Schlumberger, look at the nice candle in Schlumberger today. Didn't really break below the value area here, so still way above the 50-day moving average, but took out a couple candles here. So this looks really attractive. That was, I would say, the biggest call buyer that we saw was in Schlumberger and in SLCA, which is another name, but these were the March 77.5 calls. Remember, they've already reported. We're seeing so much earnings flow in options that will make your head spin. But at least in some areas like Schlumberger, March 77.5 calls, you don't have to worry about earnings. Also, some Halliburton calls went up too. Keep in mind, both of these names, nice looking candle in Halliburton as well. Both of these names are in the OIH ETF. So if you don't want to own the individual names, you could buy OIH, which also looks very attractive, I think, too, after a dip. A nice move back. Probably shook out some people a little bit, and a nice green bar. So I think this is very constructive. SLCA is another name that popped out of the 200-day moving average. Maybe not as constructive as a candle as OH, Schlumberger, and Halliburton, but they came in and bought calls in this one. There were some puts as well that looked like they were bought. So we'll see who wins. But those were 10,000 of the March 40 calls that went up. This one's pretty easy. You got that white line is the 200-day moving average. You can go long versus the 200-day moving average. If it breaks, get out. And but good to see. There's a couple other names too: CLR, QEP, and then XLE. There was a nice call buyer of XLE. Keep in mind, Exxon and Chevron. Again, we got to have everybody report. There was a couple chunky orders in the XLE ETF, and again, a nice looking candle. Your support for this one is 74.72. So it looks like they're positioning possibly for some good results from Chevron and Exxon. We will see how that goes tomorrow. But I would say that was definitely the major theme in call buying today. A couple other orders today. We'll go through a couple of charts. Twitter looking great. Moving outside, it was flirting with the top of value for the last couple of days. It is now broken out, so that's a name that I'm long. I'll show you my cash portfolio, my cash trend portfolio. Here it is. Had a nice day today. Still outperforming on all fronts. Since inception on 315, up 35% versus the S&P. So really nice performance. I'm long Twitter. I actually added to Twitter, I think back in here someplace. We also got long in options as well back here, which was a hell of a trade that we put on Friday. So really nice maneuver, and they've been in a couple times since Friday, adding to some call positions. A few other names to go over. We did start to see a little bit of call buying in some of the material space. We saw an XME call buyer. Right, these are some groups that have gotten pounded over the last week. XME. Kind of looks like a sell signal here. I'm not so sure I want to jump in to XME here, so I think maybe on an individual name basis. But tech resources, take a look at that candle. Like, this looks really attractive to me. I think they report in a couple weeks, but look at that monster candle after consolidation. You got the 52-week high next, would be the next level for that to take out. A little bit more casino buying. So gaming, again, call buying. IGT, which is a name that I've been long since the beginning of January. Look at this sucker. 52-week high today and broke out today. There was a bunch of spreads that went up in SGMS, which has been a little bit of a dog the last couple weeks. Sitting underneath the 50-day moving average, so more of a work in progress for this one. But I think IGT looks great. Also, Las Vegas Sands saw some call buying, and then the last order on the call side today was Salesforce. Take a look at this order, right before Workday reported, 30 seconds before the close, monster order, $2 million order, August 120, and look at the time they gave themselves, August 120 calls. That is an opening trade. It was swept. I'm pretty sure. Let me just make sure. Yeah, that's an opening sweep order as I query for sweeps. I mean, this group has been pretty strong. If you go through some of these charts, Salesforce is just a little bit off the highs. Could have some more upside ahead of it. Again, I like these big chunky orders where they're giving themselves plenty of time, not some of these, weekly call buyers that we see a lot of the times where somebody's looking, for quick momentum. But if you look at names like Adobe, I think Adobe looks pretty attractive here. It looks like it's kind of a flag pattern that you got going here in Adobe. This whole group, if you look at the IGV ETF, this is the tech and software ETF, looks pretty strong. Didn't have a great day today, but maybe Microsoft weighing on that a little bit in IGV, which is in that ETF. So that's it for today's video. Almost 15 minutes long. A lot of things to concentrate on. From a trading aspect, two P's, I would say. Number one P is patience. Have some patience. Clearly in the overall market. We've lost that upside swing for the time being, right? This is the upswing. So, we're right in the middle of the February value area. It may take some time for this to work its way through. So give yourself be patient. Don't overtrade this market, which I know is easier said than done. And then the other P is positioning. Be careful if we're going to get, if we may have a little bit of chop on our hands for a little while, until it's a decisive move higher, which will only take one day, by the way. Just be careful how you're positioning yourself in the near term. Give yourself plenty of time on your positions. Don't go all in on one position. If you get a little bit of volatility, again, you might be able to get in a little bit cheaper. So scale in is what I'm doing, and going a little bit further out, and trying not to overtrade as much, and then giving some patience. Just because you see a little bit of volatility, I'm not going to run for the hills just because the S&P just sells off a few handles. I know it's different than what we've seen lately, but hang in there with your positions. All right, thanks for watching. Have a great night, and see you tomorrow.